Every corporate entity relies on a general ledger and a trial balance. A trial balance is a bookkeeping worksheet where all the company's debits and credits are compiled into two columns. In standard accounting, those two columns must always equal each other. When those columns do not match, the company has an out-of-balance ledger. This discrepancy indicates either a total failure of internal controls or the manual manipulation of financial data. At Background Check Group, or BCPL, a forensic review uncovered a massive red flag. Their 2018 trial balance remains out of balance due to unclosed fiscal years, a violation of basic accounting standards. A failed ledger renders all subsequent financial reports legally indefensible. This technical breakdown provides the necessary cover for unauthorized transactions to remain hidden from regulators and shareholders. In March 2025, investigators discovered severe irregularities in BCPL's January records. These findings suggested active financial embezzlement. Typically, a company facing these findings would initiate an independent audit. Instead, BCPL's management asked the finance head to review his own ledger irregularities, an immediate conflict of interest. Within 4 days of this discovery, the finance team began a systematic exclusion campaign. They locked the company director out of management accounts and used a hidden email alias to route financial data around him for 9 consecutive months. The lockout established a defensive perimeter around the company's books. It allowed the syndicate to protect an active inside job from internal oversight. The syndicate treated the company treasury as a revolving credit facility, a type of flexible loan where a borrower can withdraw, repay, and withdraw funds again. Ledger entries show high-risk cash extractions taken with no oversight. The finance head alone moved over 2.3 million Pakistani rupees into a personal advance account. Digital logs from December 2025 exposed a second looting mechanism, the systemic manipulation of company payroll. The finance team dispersed salaries to ghost employees, individuals with zero biometric attendance records, while simultaneously issuing unauthorized salary increments to the executive syndicate. These fabricated expenses and advances functioned as continuous siphoning mechanisms. They were designed to bleed the company's liquidity while bypassing every standard internal control. The syndicate's strategy eventually shifted from cash extraction to a hostile takeover. They achieved this by weaponizing the company's international payment routing. The finance team intentionally misclassified incoming corporate revenue. They recorded legitimate company earnings as a massive personal debt owed by the director. This created a fabricated liability of 15.8 million rupees, surgically attached to the director's name in the company ledgers. The perpetrators used this multi-million rupee debt as direct leverage. They successfully extorted 25% of the company's equity from the rightful owner in late 2025. By weaponizing accounting mechanics, the perpetrators successfully converted a fictitious debt into a 25% ownership stake in the company. Maintaining a shadow ledger and hiding a hostile equity transfer required total control over the flow of information. The syndicate had to compromise the company's IT infrastructure. Domain management records show the creation of verified secondary domains like x24.io and grc24.com. These allowed the syndicate to route communications entirely outside of official, auditable channels. They also deployed bespoke spyware. This continuous screenshot application ran every 30 seconds, monitoring the director's local machine and capturing his legal communications. The deployment of rogue domains and continuous spyware elevates this from a financial crime to a coordinated, multi-year digital espionage operation. A broken internal ledger eventually triggers external alarms, threatening the company's global operational hubs. The Singapore entity, Background Check Pte. Limited, saw its standard chartered business account frozen. The bank flagged the account for Know Your Customer compliance failures, a direct result of the unresolved ledger anomalies. This procedural discrepancies registry shows the cascading regulatory fallout. Investigations by the Securities and Exchange Commission of Pakistan uncovered hundreds of high-severity violations. The final audit summary captures the scale of the institutional collapse. Investigators documented 921 separate events and identified 645 direct violations. The syndicate's internal manipulation acted as a corporate poison. It systematically destroyed the banking and regulatory trust required for the business to survive. Basic accounting mechanics, shadow ledgers, and excluded emails provided the blueprint for the company's destruction. Financial controls act as a corporation's immune system, detecting internal threats before they can spread to the wider enterprise. Without ironclad governance, a company can be hollowed out from the inside by the very people hired to balance its books.